Now, you might be tempted to buy the Nasdaq stocks, betting that they're going to come roaring back right now, even if the charts went from great to horrendous, which is what happened when you have a spike up. But I'd rather find companies that did well in earnings season and got trampled on unjustly in the last few weeks because they weren't part of the Nasdaq stampede. That way you can fall back on the fundamentals. Those still matter, and buy more if they end up going lower because they'll be getting cheaper, and they're not done going up if it comes to earnings. Now, regular viewers know that I run the CNBC Investing Club, and I'm totally exclusive to CNBC now. And as part of that club, I have a recommend list. I also tell you about stocks I want to buy if they come down in price. For example, on Friday, I told club members, you would have gotten this bulletin, that we were buying Morgan Stanley for the charitable trust. To me, this company has done everything right during this period. But because of the inane rotation out of the financials, the stock's been crushed. Now, get this. Morgan Stanley sells for just 12 times earnings. Most of the Nasdaq stocks I look at sell at least 30 times earnings. This is at 12 times earnings, which is a pittance versus that high-flying Nasdaq cohort that had been running until today. If Morgan Stanley stock keeps coming down, I'm confident that I'll keep telling club members to buy it because it's so darn cheap. Hey, how about this one, Centene? You know this has been my favorite health insurer for ages. It's run by the great Michael Neidorff. We have him on every quarter. Centene mostly manages government-run health plans, so they'll benefit enormously from any expansion in Medicare or Medicaid, and those are two things that the Biden administration is actively pushing for. Admittedly, the stock's only down a few bucks from its high, but what I care about, again, is the ultra-low price-to-earnings multiple. Remember, that's the real fundament of stocks. Centene sells for just 14 times earnings, even though it's buying back stock hand over fist and has a very good growth rate. Neidorff is a steady hand, and his recent acquisitions are working out splendidly.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.